Hey guys, how you doing today? Today we're going to talk about Allstate, and I hope you find value in this channel. And like, subscribe, and share, please. I really appreciate it. Thank you very much. So let's start off by looking at the stock itself and the stock price. It's a full stock analysis on this company, and why I'm going to continue to buy more in the future. Okay, so Allstate has a price of $102 as of today, and it has a PE ratio of 14.65 and an EPS of 6.91. Okay, it also has a dividend of 50 cents per share, which is 1.98%. Okay, so if we look at the financial statement, okay, we can see here clearly that from 2010 to 2018, we have a revenue increase year by year, okay, which is very good. That's what you want to see in a stock. And you have operating income of $3.1 billion. And if we look at the net income, we have positive cash flow, which is $2.1 billion for this year's, and an increase on EPS year by year since 2010 all the way to 2018, which is what you look for in a stock. Okay, the company also has a dividend that they pay out, which I mentioned earlier, and it has a very good upside trend. Okay, so which what we look for in value investing. Okay, so if we look at the annual rate of return for the past 10 years, you get the current you get the current EPS 10 years back. Okay, so you pull out your chimp calculator, annual rate of return, punch in the current EPS, which is 5.96, then punch in the previous EPS dating back 10 years, which is 1.58. Then you punch in 10 for the number of years, and you get 14.20 for the annual rate of return, which beats the S&P 500, which is 9.5, which is not bad for a stock, not including the dividends. So if we add the dividends onto this, then you're probably talking about a 16.5%. Okay, so the goal here is to get stocks that can actually beat the S&P 500. Otherwise, you're better off just investing in the S&P 500 itself and saving yourself the trouble to do these tasks, which takes forever to measure these metrics and all this stuff. Okay, guys. So with that being said, I don't know if that intrigues you, but to me, for a 16.5% is really good margins. Okay, so moving forward, if you want to find out the future valuation for this company's EPS, all you have to do is enter the interest rate per time period, which is 14.20%, enter the number of time periods, which is 10 years, and then enter the present value, which is the EPS 5.96. Okay, then you press calculate, and then you get a future valuation of 22.49. Okay, this calculator you can find in Investopedia, and all you have to do is punch in calculate future valuation. Okay, if today you were to invest 5.96 at a rate of 14.20, you would have 22.49 at the end of 10 time periods. Okay, so this all that means. This is what you can expect in the future for this company and its future EPS. Okay, guys. So moving forward with the next slide. Okay, so what we have here is the balance sheet. The balance sheet is used to determine your margin of safety. Okay, so basically, what would happen if the company went bankrupt or sold all its asset, and how much would you keep? Okay, so the intrinsic value of Allstate in this moment is at 65.53. So this is what the company is actually worth, and then we have a PB ratio of 1.58. Okay, which means that it's selling at 1.5 times its share price. Okay, according to Benjamin Graham, we need to invest in companies with book value under 1.0. Okay, so what this means, if the company would sell all its assets, the bank and went bankrupt, the shareholders would keep approximately 65 per share. Okay, so basically this is our metrics here and what we're dealing with as far as Allstate, and then moving forward, and the way to calculate these numbers. There's many ways to calculate this. There's actually only one way. You can find that in Google and or maybe many other books that can teach you how to add these. You can find it on Google, Yahoo, anywhere on the internet. You can find these numbers, and you can also do your own calculations. Okay, so here we have debt to equity ratio. Okay, we have a debt to equity ratio of 0.30, which is low. Okay, and according to Benjamin Graham, we want companies with debt to equity ratio of 1.10. Okay, because it's important to invest in companies with low debt. Okay, we also have here a PE ratio of 14.6, and according to Benjamin Graham, we look for companies with low PE ratios, preferably under 9.0. But if you compare this stock to the S&P 500, which they have currently a PE ratio of 21.86, which means that Allstate is a better choice at the moment. Okay, so this channel here is all about value investing, and this is what we center most of our attention to. Okay, here we have Progressive. Okay, so really quick, this is the only other competitor that Allstate has in the insurance industry, because the rest of the insurance companies are not listed as public offerings in the stock market. Okay, so just real quick here, pay attention to the price to book ratio, which is 4.04, which is 4 times its share price. Okay, so the stock is really overvalued, and then we have a book value per share of 19.89, which is what it actually is worth. Okay, and the actual price at the moment is at about $86. So I would not even mess with Progressive at this moment unless the price went down. Okay, the other top companies are State Farm and Liberty Mutual, which are not publicly listed. So this is all we have here as far as competition. Okay, so now if we look at the cash flow statement, we have free cash flow for this company, which is something that's really important because this is the money that is given to the shareholders in dividends or can be reinvested in the future for more profits in the future. Okay, so we have 4.9 million in cash flow from operations and cash flow from operations, and we have cash flow from operations. So we have about 4.9 million, and we have an increase here of 21.99 from last year, and then year over year we have a over 10% increase, which is really good. This is what you want to see in a financial statement. This is what you want to see in cash flow, and this is what you want to see in a company. Okay, so this was Allstate. Please subscribe, like, and share. I would really appreciate